Canada just made one of the boldest moves in recent trade history, a 214-imagine power play that might have reshuffled the entire global deck. The U.S. wasn't ready for it, and now the whole world is paying attention. What does this mean for the future of trade? Will the U.S. strike back, or are we witnessing the rise of a new global leader? Let me know your thoughts in the comments. I'm seriously curious. And if you find this as wild as I did, hit that like button and subscribe, because we're just getting started. Rewinding the tape. Let's rewind a bit to understand how we got here. For years, the United States has been the MVP of global trade. Think of it as the captain of a championship team, always calling the shots. Countries like China, Mexico, Germany, and Japan have all been key players in the U.S. trade circle. In 2023 alone, U.S. trade with its top 5 partners topped $1.8 trillion. That's not small change. That's serious economic muscle. Sure, there have been ups and downs, trade wars, tariffs, shifting supply chains, but the U.S. has remained at the center of global trade. However, in recent years, something has been changing, and not many people noticed: Canada's quiet strategy. While the U.S. was focused on tightening policies, pulling back from trade talks, and dealing with internal political challenges, Canada was quietly making smart, strategic moves. The kind of moves that don't make headlines until they do. Now here we are, Canada has pulled off a $214 billion deal, scooping up trade partnerships that once had the U.S. name on them. So how did the quiet neighbor to the north end up making such a massive global power move? The Pan-Atlantic Trade Compact Canada just signed what is being called the Pan-Atlantic Trade Compact, a $214 billion agreement uniting global heavyweights like Germany, Brazil, Japan, South Korea, and emerging players like Vietnam and South Africa. This isn't just a basic import-export agreement. This deal runs deep. We're talking zero tariffs on clean energy tech, aerospace components, rare earth minerals, AI software, pharmaceuticals, and even agricultural products. Instead of going to the U.S. for soybeans, lithium, or smart chips, these countries are now locking in trade with Canada for the next 20 years. That means guaranteed supply chains, tariff-free exchanges, and long-term stability. It's like getting a VIP subscription to half the world's economy, and the U.S. wasn't even invited to the table. Strategic and forward-thinking. This deal didn't just come out of nowhere. Canada spent months quietly negotiating while global attention was fixated on U.S.-China tensions. During that time, Canada built trust, offered green incentives, tax breaks, and even developed new digital trade standards, future-proofing the agreement from the start. And here's the kicker: the deal is expandable. More countries can opt in over time, especially those frustrated with the unpredictability of U.S. trade policy. That $214 billion figure? It could just be the beginning. Who's on board? Let's break down the key players. Germany. Once a strong U.S. ally, Germany is shifting toward Canada thanks to clean energy incentives, raw materials access, and fewer political strings. Japan. A major tech partner, Japan signed on for better IP protections, fast-track supply chain agreements, and joint AI research investments. Brazil. With its role in agriculture and energy, Brazil fits right into Canada's focus on green exports and food security. South Korea, keen on digital infrastructure and electronics, Korea joins for the semiconductor and telecom advantages. Vietnam. As a fast-growing resource hub, Vietnam views this as a way to gain global exposure, without getting caught in U.S. political crossfire. Many of these countries have long-standing ties with the U.S., but rather than wait for Washington's next move, they're hedging their bets on Canada. Why the shift? Why would traditional U.S. allies pivot to Canada? It's a combination of factors Canada quietly capitalized on while the U.S. was distracted. 1. Trade instability in the U.S. Trade policy in the U.S. has been a roller coaster. Tariff shifts, diplomatic uncertainty, and political gridlock. One administration signs a deal, the next tries to undo it. That's exhausting for global partners planning long-term. 2. Canada's resource advantage. Canada is rich in rare earth minerals, essential for EVs, semiconductors, satellites, and more. While the U.S. struggled with supply chain issues, Canada offered clean, ethical, and reliable sourcing. 3. Political stability. Canada's political environment has been more consistent, especially in trade. That's crucial when you're signing 20-year deals. 4. Smart immigration and innovation policies. Canada has been investing in high-skill immigration, green tech, and AI. That signals a future-ready economy, a big plus for partners. And here's something most people miss. According to the World Economic Forum, Canada ranked in the top 5 globally for economic openness and trade trustworthiness in 2024. What this means for the U.S.? For the U.S., this is a wake-up call. Economically, it's a hit. As countries redirect trade to Canada, the U.S. stands to lose billions in exports, investments, and influence. In agriculture, Canadian farms could replace U.S. suppliers in Europe and Asia. In tech, if countries choose Canadian AI and semiconductor firms, U.S. companies lose leverage and workers lose demand. Politically, it's even more damaging. When allies bypass Washington in favor of Ottawa, the message is clear. We're not sure we can count on you anymore. And since these deals are structured to last decades, by the time the U.S. pivots back, it might already be too late. What this means for Canada. For Canada, this is a game changer. The $214 billion deal instantly gives the country a global leverage and credibility. No longer just a middleman in North American trade, Canada is now a primary supplier and strategic partner to some of the world's biggest economies. Economically, the deal is expected to boost Canada's GDP by up to 2.4% over the next 3 years, according to early OECD estimates. The benefits will be felt across sectors. Tech and AI, more investment, more partnerships, more jobs. Energy and mining, global demand for Canadian lithium, nickel, and rare earths. Agriculture, bigger international markets for Canadian farmers. Geopolitically, Canada now has a stronger seat at the table on trade talks, tech regulation, and climate action. The bigger picture. This isn't a lucky break. Canada earned it through smart planning, steady diplomacy, and targeted investment in future industries. This isn't just a trade deal, it's a power move. Now the big question, what happens next? We're already seeing signs that the U.S. is preparing to strike back. Talks about revisiting NAFTA 2.0, restarting trade discussions with the EU, and launching new incentives. Washington may pivot toward new alliances in Asia, Africa, or Latin America. But while the U.S. gears up to play catch-up, Canada is already lining up its next round of trade partners. And remember, this compact is designed to expand. More nations could join, from Scandinavia to the Middle East, maybe even Australia. Some analysts are predicting a shift toward economic blocs, countries teaming up based on long-term trust and stability, not just GDP size. If that's true, Canada just positioned itself as a leader in this next chapter of global trade. The bottom line, for everyday people, this could reshape the global economy. Where your phone is made, where your car parts come from, even what shows up in your online shopping cart. This deal isn't just big, it's a signal. The old rules of global trade are changing, and Canada just made the first major move.